Inflation is eating away at all of our wages year over year. In fact, if inflation was to stay at 9% for 7 years consecutively, you would have a 50% haircut on your total earnings for the year. So I'm going to be going over the exact way they're skewing the inflation numbers, CPI numbers, to make it seem like inflation is much lower than it actually is. Welcome back. If you're new to the channel, my name is Matt Jimenez. I am an entrepreneur who has been able to work with the greatest minds in finance over the last 4 to 5 years just via my online business. So I decided to get together and put all of this knowledge into one show just for you guys. So CPI is Consumer Price Index, and this number comes out every month, and what they are trying to do is gauge the rate of inflation and how much the people are actually feeling it. Unfortunately, a lot of the numbers are skewed, and most of the time they are excluding food and energy, which are the two main things that are the most subject to inflation. The reasons why they do that is because they say that food is too volatile and energy is too volatile, which I'm sure you guys feel that. If you look at beef is up probably around 32% last time I checked, and gas prices feel like they're going up 20% every week. The Bureau Labor of Statistics, this is the organization that reports the CPI numbers for us. Back in the 80s and the 90s, they moved the CPI scale from a cost of goods index to a cost of living index. But the problem is, when you measure it on a cost of living index, they're not measuring the substitution. Let's say that you are allergic to gluten or many other allergies that are out there, and you are almost forced to buy certain foods that tend to be more expensive because it's a higher quality. But now when you measure it on a cost of livings index, they're not measuring the substitution. So you may opt in for a cheaper product, but now you're diminishing your quality of life. So the cost of goods index will only measure that basket. Does not include the substitution that we need in order to have the returns on our health or the quality of our life. Now, in the cost of living index, they just care that you have the product. So for instance, myself, I like to have very minimally processed things, and I like to have beef that is grass-fed and grass-finished. Now let's say that is $10 per pound, but I can't afford it. So I would opt into a cheaper product, which is not grass-fed or grass-finished, nor is organic, and it's probably pumped with tons of antibiotics and hormones. So now, for me to keep my cost of living low, I opt into a cheaper quality of beef, overall affecting my quality of life. So the way that they can screw the data is they just make sure that they don't include the changes of substitution. Substitution will always have the biggest impact in your life because the things that you opt in for are the things that you want to optimize in your life. So if you're not taking into account that just to keep the number of the cost per living index down, now we're having a lesser quality of life. Here we have the Bureau of Labor Statistics. On this website, you could actually track all the things that you need to know about the CPI. You can go to previous data, you can go to publications, things that revolve around it, about CPI, etc., etc. Another place where you can track this data is a place called Forex Factory, where you will get all the news releases related to financial news, where you can prepare for volatility in the markets. I keep a heavy eye on this exact website right here. And in fact, the reason why I'm talking about CPI is because Tuesday, November 14th, we are actually going to get the CPI numbers. So we have the core, and then we have the CPI for the months and CPI for the year projection. Keeping track of these, you could always hit the folder and see where it was previously and what they are forecasting it to be. That's the core. Let's go to this one. All of this is exactly what we need to be looking at. Now let's do a little experiment and let's hop over to TradingView. So here I just scrolled a bit back on Forex Factory and I decided to pick September to check the CPI reaction in the markets. Let's pop over to Euro USD. The last CPI data that came out in September was right around here, where we got this knee-jerk reaction. So as you can see, the markets will always have a reaction to news. It is very rare that there is no reaction to the news. This is why for all of my years that I day traded, and everyone that is involved in day trading pays tons of attention to news, because there is always some type of move to either be capitalized on or just stay away from, because you don't want to be on the wrong side of news, because you do get movements like this. Now, I could go through the chart and check out all the CPI releases and see all the knee-jerk reactions in the market. Now, I'm going over CPI, like I said, because it is coming out November 14th. So as you can see in the charts, there's always going to be some knee-jerk reaction. Luckily, I'm not manually trading anything during news, nor when I was really active in trading did I ever trade through news, because there's always some type of knee-jerk reaction and it always reverts, leaving a wick. Luckily, I've been able to position myself with software to be trading during any news releases, and the results have been quite exceptional, I must say. But that's not to say that future news releases are going to be the same. I'm just saying from my experience. But enough of that. The purpose of this is we have to find a way to try to beat inflation. Instead of our wages getting eaten by inflation, we need to find a way to have our wages grow rather than being diminished. I've been utilizing the software, and if you're interested in how I'm doing it, just go ahead and hit the link below, and I'll see you in the next episode.